So welcome back everyone. Okay, on the previous video, the part one of this video, I tried to explain about what is an order block, what is an order block, how these order blocks are formed, how they relate with liquidity, how institutions use order block to create and use liquidity to their advantage, how they take the buyers, how they take the sellers, how can we understand the footprints that are being left behind by the institutions. And I said something that if you really listen carefully to the previous video, you might be able to create your own set of rules from it. You will be able to create your own strategy. Because the previous video, I think it was not about an order block, but how market moves with liquidity, how liquidity gets taken out. So, and the only way to know when liquidity is going to take it out is to wait for the liquidity to be taken out. Okay. On this video, I'm going to show you an example of the trade which explained about the concept of order block and how I used it on my market analysis. But something that I would like to advise everyone is that trading is hard. When I was beginning trading, I looked at the price and I used to go crazy. You see that this kind of, sometimes they just move in different directions. They go up, they go down. So you don't really get the picture of what you should do. So something I learned, I think I listened to this from a trader here somewhere on YouTube. If it was not on YouTube, it was on TikTok one day. I listened someone say, he said that when he was starting out trading, he used to look at the price and you see this price going up. Sometimes they go down, after sometimes they go up, they go down. And he never really understood what's really happening with the market. So he had to identify what was the problem. So also he had to make it very simple for him to understand. And to know that, I had to understand how this market moves. So I come to realize that the market is engineered by liquidity. So after coming in contact with concepts like smart monies and ICT, I realized that the market are moved by liquidity. So if you know when the liquidity is being taken out, then you can trade. If you understand the footprint that are being left behind by the institutions, the market makers, then you can learn to be a good trader. Then you can become a good trader. So I had to learn and to understand that. And on the previous video, I think I tried to explain that. And I think I'll have more video on that, because that's a very important part. You have to understand how this market move, how this market are priced. Okay. Then the next step is to, after understanding that, you have to create your own set of rules. I mean, it's like set of rules that will be used by yourself when trading. Okay, so coming to that, so in this example, I will show you how the steps that I took from starting to the point that I took a trade. Okay, and personally, I have only 4 sets of rules. Okay, they are very simple, and I use these rules on all time frame. This is very important. I use this in all time frame, and they are just four of them. So the first thing is the market structure, the higher time frame market structure. I like to call it like that because the higher time frame market structure. So I have to look for the higher time frame. You can see from right here that the series of the time frame that I mostly use is 1 monthly, daily, 4 hours, 1 hour, and 5 minutes. But these are my favorites: the daily time frame and the 1 hour time frame. The monthly, I go there because let me tell you something, that for the monthly candle to form, it takes a whole month to form one candle. So you can say that every day you're going to look at the monthly time frame. It's crazy. So I mostly look at the daily time frame. Every day I start from the daily time frame. Okay, I can look for price on the monthly time frame, but in very few cases, you see, like maybe once a week or once on 2 weeks. But also the 5 minute, I don't play there a lot because it's a lower time frame. It's crazy and you don't want to be there. okay? Unless I'm refining my risk, because I don't go there, I don't do anything. So I like to start with my analysis on the day time frame. And let me tell you something. If you are trading on you are starting from the day time frame is your higher time frame. If this set of rules have not been, what can I say, have not been, all rules have not been checked on the day time frame, don't even bother. Don't press any button. Don't try to draw any line. Don't go on the lower time frame to do anything. Don't go on the 4 hour, don't go on the 1 hour, don't go on 5 minutes, don't go anywhere. Just leave that pair for that day, let it be, go do another thing. Go to another pair, go analyze something else. You see? So the first rule that I have is, okay, I'll display them for you. The first rule is the higher time frame market structure. I look for the higher time frame market structure. I'm talking about the high and the low to be taken out. You see? And not just be taken out, the candle close above or below it. Okay? After that, I look for liquidity. Has liquidity, I'm talking about are the buyers and the seller being taken out? That is very important to us on the higher time frame. Like I said, on the higher time frame, are the buyers and the sellers being taken out? Okay? The third thing that I look, because let me tell you something, this I learned that it's a saying, it's a very famous saying that if you can find liquidity inside the market, so you're probably the liquidity, you're probably going to be the liquidity, because if you don't see where the hell is liquidity, then you are the liquidity. You see? If you can find the liquidity, you are the liquidity. So that's the very important next step. If I don't find any liquidity, I stop right there. I go to the next pair. There is a break of structure, but there is no liquidity. Maybe there is candle close below, above the high, but there is no liquidity being taken. I stop right there. I go do something else. I go analyze something else. Okay? So the second step is liquidity. Is liquidity being taken? Are the buyers and the seller being taken out? Then obviously, if the buyers and the sellers being taken out, that checks it. So I go from I found my point of interest. I'm talking about the PD arrays, maybe the order block, the breaker block, the fair value gap there. I look at this. There's a lot of them, but I prefer this, the point of interest. And in most cases, on my scenario, I like to look for them on the, I like to look for them on the optimal trade entry. I'm talking about the above the 0.6 level on the Fibonacci, or say 0.7. I think 7.4, something like that level on the Fibonacci. After that, I refine. Okay, so I start my analysis on, usually as I've told you that I usually start my analysis on the daily time frame. In most cases, I start my analysis on the daily time frame. Okay, so let's go back. After understanding this set of rules, let's go back to the charts. Starting here from the daily time frame, I think I took this trade in September, somewhere in September, if not August. I don't remember exactly. I think the dates are down there. I don't remember the dates. Okay. Actually, in honest, I'm a swing trader because I start from daily. I hold trades for, like, I don't trade intraday. Most cases I tried, but bro, it's a lot of things, and I have a lot of things to do. I love to do other things also. Okay, so I like to do swing trading. So okay, so I hold my trade for like 4 or 5 days, maybe even 2 weeks, sometimes 3. It depends. Okay, and I don't take a lot of trades in a month. Like for a whole month, if that month I have a lot of trades, maybe on a single pair, it's 2 trades or 3. Just 2 or 3 trades. Okay, because I look for very high quality setups. Let's start on the daily time frame. I can play this chart for you. As you can see that I'm playing this chart for you. Okay, so I've explained my set of rules. First, I've explained my set of rules. Okay, from here, I think, let me start from here. Okay, from there, I'll try to go a bit fast on this. Okay, so from here, let me start from here. If you look at this price from the set of rules, the first rule is high time frame market structure, high and low. So I look for highs and lows. Has highs and lows been taken out? Okay, we can see that the high right here was taken out and the candle closed above it, you see. But I tried to look for liquidity, but I found there was no liquidity being taken out right there. So this was invalid for me. So I waited. Okay, you have to learn to be patient also when you're trading. Okay, the next thing is I looked for I waited. After these 2 days, I found that the price broke structure to the downside. You can see the price broke structure to the downside. Then I noticed something. The first rule checked right here, that the price broke structure. You can see that the price has broken structure below this low right here. Let me mark it for you. The price has broken structure right here. As you can see, the price has broken structure right there. Okay. Then the next thing, price. What's the next rule right here? The next rule says that has liquidity been taken out? Okay, you can see that we had sellers from up here being taken out by this move. Then we had the buyers being taken out by this down move. So on the daily time frame, the liquidity has been taken out. Also, the higher time frame, so the first two checks. So on the daily time frame, we can see that the first two checks that the higher time frame market structure, that the candle has closed below the low. So there's a break structure. Okay, there's a change of character. Okay, change of character. Sorry. Then the next thing that we want to see, has liquidity been taken out? We can see that the sellers from this position, I've explained a lot about this on the previous videos, so you can go and watch it right there. Okay, the sellers from down here has been taken out. Also, the buyers down here has been taken out. Also, the sellers up here has been taken out. You can see that. So now we see the liquidity. So obviously we are not the liquidity anymore. Okay. So what's the next step? What's my point of interest? What's my PD array? So, okay, what's my point of interest right here? So my point of interest, I have an order block right here. This order block, I took this order block as my point of interest right here. This order block was my point of interest. As we can see, I've tried to explain this on the previous video about order blocks. So I think we all know about order blocks. Okay. Now this on the daily time frame, so I marked it. So we have an order block right there. So what's the next step? What's the next step? We go to the lower time frame. This is the 4 hour. Okay. Now on the 4 hour, coming back to the rules. What is the market structure? At the candle close below the high or the low at the candle close below the high or the low. Okay, we have the candle close below this row right here. You see, what's the next? Has liquidity been taken out? You can see that the liquidity from this side here has been taken out. Also, the liquidity from down here has been taken out. So we no longer have sellers and buyers from these positions. Okay, so what's the next step right here? Okay, so let me see it for you right here. Okay, we have this. Okay, now after seeing the liquidity being taken out, what's the next step? It's the point of interest. So we are looking for PD arrays on our point of interest. Now from the higher time frame, this was our point of interest. We don't look anywhere else. We just look right here. So from right here, what do we have? We have this fair value gap from this position. We have this fair value gap from this position. Okay, that's nice. Now we have our fair value gap. Okay, then we go for the 1 hour because everything checks out. So the next step is to refine. So we go to for 1 hour. Okay, from 1 hour, we can see that we already know that if the rules check on the daily time frame, the rules check on the all other lower time frame, but just like an additional point, you can see that on the 1 hour time frame, you can see that there was liquidity being taken out from up here, also liquidity being taken out up here. Then you have this like flip forming right here. But also remember, on the 4 hour, we have a fair value gap forming right here. So this makes this order block a very valid entry. See, but I want you to understand one thing first. We understood the footprint that were left behind. See, we see the liquidity being taken out. We see the price like being formed. See, we see the move. Now we know the institution inside the market, so they want to sell this. Now we just wait for the entry to come back to our direction. So After refining this entry, okay, in 1 hour, you can see that all the rules checks. Now we have already defined, okay, like I said, I don't like to go a lot to 5 minutes because it's just crazy down there. Also, I don't go a lot to monthly, okay? And for this case, let me talk about the 5 minutes. If you open for the 5 minutes right there, you find like a lot of crazy things down there, okay? Like for right now, we can see on 1 hour, we have like fair value gap right here. We have this order block, we have this fair value gap. Okay, you see, all of these are valid on this case, see? But if you open on the 5 minutes, you're going to find a lot of entries. So I only go there if I don't understand something on 1 minute or it doesn't align with my risk management strategy. That's the only thing that makes me go to 5 minute time frame. Okay. Now, next we just wait. We play the price and wait. Okay. Now, after aligning something like this, I just wait for the price to start coming back to my point of interest. Okay. And usually because I don't stay a lot on the market, so I will usually put like a sell limit right there and have my stop loss few pips above the PDRA. See, also I'll have like my take profit somewhere after 1:4. I take some profits of the market, so maybe I'll put something right there like this, something like this, just for some my take profit. So to read the price and take some profits from right there. Okay, but also the next take profit will be below the low that I hope will be taken out, because we know that this institution wants to go lower. Then I put my entry like that. Then I just leave the markets. I go do something else because I don't have to wait all day looking for these price moves, waiting for this price move to be complete. Okay. And if I keep staying right here, I'll just overthink. See? Now we can see, then we look how this order block plays out. Okay. So I'll pay the price so you see how the price moved in this direction. So actually, honestly, you don't need to have like some crazy strategy like this to trade. You don't need to. You don't need to have like very crazy risk management. See, you just have to have a very good, what can I say? A very good high probability setup, so you don't trade everything. See, and also you can see that we have been filled after, I think this was the news, filled me in this position. Okay, so you can see that we've been filled in this position. So we went for our entry to go for our take profits, and while we are waiting, just like an emphasis. So the first step you have to do is you have to understand how the market moves with liquidity, how liquidity gets taken out. That's a very important first step. You have to understand how the market moves, how the market move the price, how is it influenced by liquidity. Okay. Then the next step you have to know is, after understanding that, you have to know about these PDRAs. So I started with the order block, but I hope I'll provide another video soon about something else. And I think maybe it will be, if not mitigation block, if not, it will be breaker block or fair value gap. I don't know. I'll prepare a lesson, then I'll tell you. Okay. Then I will produce them in the video and they upload it right here. Okay. After really understanding all these concepts, then you can come back and create your own strategy. After really understanding, you don't have to take my rules right here. And when you're creating your own strategy, just try to keep it as simple as possible. Don't try to confuse yourself with a lot of things. Just keep it as simple as possible, as simple as you can. Okay. You should create your own strategy depending on your set of rules and how you react with the markets, on how markets affects you. Okay, you don't have to trade like me, you don't have to trade like anybody else. Okay, so you can see that the price took our take profits right here. So this was my trade, and I think I only on this September I only took this trade. I didn't took another. I think I had another analysis, but I didn't get filled, something like that. But for this month, I just took this trade, and I was done for the month. But it was very good risk reward ratio. I think I made a few dollars from it. I think it was something, I don't remember. Okay, I don't remember the exact number. Okay, but this was my only trade that month, and I didn't took any other trade. Okay, because I took these swing trades, so I don't took a lot of them. Okay. Okay, and I think that was it for this video. So just remember, if you're planning to trade order blocks or any PDRA, you have first to understand the mechanics behind that. You have to really understand I'm trying to emphasize this point. I think I will provide a lot of video on this because I really want people to understand. I don't want you to trade based on patterns like double tops, double bottom, or anything that you know, but to really understand what is happening inside the market. That is very important for you as a trader, to be able to create your own set of rules as a trader. That is very important. Okay, and I think that's it for this video. I think this example will be very helpful to you, and I think I'll see you in the next one. Peace.